Hey everyone, this is Dee with Brown Girls Invest Too. I am running behind on this thing that I wanted to do, but I still want to do it nonetheless. I wanted to cover the January dividends and also give you a look ahead of what dividends I'm expecting for February. One other thing I want to do is I got a question from someone regarding a company that I covered some months ago, and I'm going to take this opportunity to show you guys something. So first, let me start with the dividends for January. The app that I'm using is the Dividend Tracker. Okay, so because I'm doing this late, this app does not allow me to show the month prior. So what I can do is show the calendar. I can't show the actual graph that they use to show January's dividends, but I can show it for February. So what we're looking at here is, again, the January 2024 calendar of dividends that I was expecting for that month. The very first company is the company that I'm going to cover later, LRCX, that's Lam Research. The next company is PepsiCo. PepsiCo and Lam Research between January 1st and 7th paid me out $305.85. Now, when I say paid me out, I don't actually take the money. I just have them reinvest my dividends and buy me more shares of that company. That allows me to build my position in that particular stock. Next up are Merck. That's a healthcare company, and TSM. That's Taiwan Semiconductor. They paid me between January 8th and January 14th, and between the two of them, they sent me $127.29. And then in the middle of the month, January 15th through the 21st, QQQ, which is an index, and Stag Industrial, that's a REIT. They paid me out $42.83. And in last few days of the month, JP Morgan Chase, banking company, sent me $101.79. All of those payments total $577.77 down here. Now, going forward, what I am looking forward to are my February payments. And it says here that I should be receiving $628.70. And so the companies that will be paying me, if I don't pick up anything else, which I actually am, I will be picking up Meta. Meta on this past Friday announced that they will be, Meta's Facebook, by the way, they announced that they would be paying out a dividend. So there you have it, a technology company that's a growth company that will be paying out a dividend. So I am expecting $78.08 from Apple. AbbVie will be paying me $284.85. Procter & Gamble, yes, will be paying me $224.83. And again, Stag is a REIT, so it pays out every month. I'll be getting $40.94. I don't have a bunch of companies that will pay me throughout February. Once I add in, I'm for sure going to add in Meta, and there's a chance that I'm going to pick up an ETF. I don't know that yet, but we'll see at the end of the month if that adds any more income into my dividend proceeds for the year. So again, that all of those total $628.70. Now that concludes what I wanted to talk about with my dividends. I don't want to spend a bunch of time on here, but I do want to take an opportunity to show you guys something. So what we're looking at here is Lam Research, and I actually have it up on a 5-year chart right now. I got a question from someone that was actually about a trade that I did. I either did the trade in March or I did it in May. I'm not sure which video they actually looked at, but I answered that question. But what I wanted to do is take this opportunity to show you guys why it is important to invest. So again, at that time, I was trading it, day trading it, or swing trading it, but I actually owned the company as well. That company, when I first did a video about it, was on March 19th, I think it was. At that time, it was trading at $485.16. Now, I have this up on a 5-year chart for the examples that I'm going to give you in just a minute. Okay, as of today, As of close of business, to close of the market today, they were trading at $851.32. Now, again, the first time you guys saw me do a video on it, it was at $485.16. That is a difference of $366.16. So if anyone had decided to purchase that company back then, you would have a 75.47% gain right now if you held it from then till now. Again, if you guys don't, I've said this before, I'm going to just say it again. The average stock market return is 10%. So to get a 75% return in less than a year, 10 months to be exact, that's pretty great. What it did for me is when I went to look at this, I kind of thought, wow, my thesis was correct. What I thought was going to happen is happening. It's not done as far as I'm concerned. But I talk with you guys a lot about companies that you know. I talk about Procter & Gamble and Home Depot and Apple and things like that. What I should also talk about are companies that are behind or that power all other companies. LRCX is one of them. Lam Research is a company based out of Fremont, California. It is only about, I think they started in 1980, so they're like a 44-year-old company, something like that. They are not a fully mature company. They are still a growth company. They do happen to pay a dividend, as you saw in, I got my little $20 from them, which I accept all dollars. That's no problem that it was $20. It is a growth and technology company that pays a dividend. So as I mentioned, it was $485 back in March. I am going to, again, the chart I have up is a 5-year chart, but the reason I have it up is because I wanted to show you different time frames of if you had picked up this company at a particular time, what kind of return you would be looking at today. And so I also marked some things on their timeline that happened along the way. At this point, at its low, that was in March of 2019. The company was trading at $163.60. There's a lot of times where you'll see a chart where someone says, if you had invested $1,000 in this particular company, after 10 years, this is what you would have. This shows you what can happen if you put your money into assets, into equities that gain in value. LRCX is one of the companies that does that. And by the way, this is not a call for you to, this is not a trigger for anyone to go out and purchase this company, invest in this company. What it is an opportunity for you to see what happens if you actually invest, what happens if you actually do the research on any company to see where it might go or the industry or what's happening in that particular industry. Lam Research is a company that they provide the machines that make the equipment for semiconductors, chip companies, to make the wafers and make chips, okay? Those chips power smartphones, they power call centers, robotics, they power AI, which is why I'm specifically, I use this as an example. We're at the, AI is artificial intelligence, by the way. We are at the very forefront of what artificial intelligence can do. And the companies that have just reported their earnings and gave guidance recently as to what's going to happen or what they're going to need, the capacity that they'll need to provide the power behind all things AI, their guidance is they're looking for threefold and fourfold years out. Lam Research is a company that's going to be needed. It provides equipment to companies like NVIDIA or AMD. Anyway, semiconductor companies. So that's for you to do the research and you to look that up. Now, what it also will do, all of this is like a domino effect. So if they provide the equipment, then the chips get made, then what does that, who do they feed? Who are they a vendor for? When you start to look at those type of things, those will give you the ideas about where you may want to consider investing your money. All right, now I'm going to go back to this chart. So again, if you look through any of my videos, I've covered this thing on March 30th, April 23rd, May 26th, June 7th, July 28th, and most recently, January 19th. I think I also spoke about it in October. I did, because they had a little trouble with the US government. Okay, I'm going to just show you at this point here. This is one of the low points they had at that time. Lam was trading at $181.38. That's March. That's March of 2020. That was the pandemic. That's when the pandemic really hit. Lam did not have trouble to begin with because they had orders in the pipeline until we had all those market crashes across the world, right? And then once that happened, we had business shut down. We had people not going to work. So there was not as much capacity needed at that time. That's when Lam Research lost some of its value. No one lost money if they didn't sell. But what also happened is if you were smart enough to go and buy the dip, if you've ever heard that, if you bought the dip, all that happened, it pulled down, it pulled back. And by the way, that was over a course of, so that's February 20th to, March. It was March 20th. That was 1 month later. And then we started to see some recovery. I've mentioned before that the market moves in a stair-step method, okay? So it will pull down, pull up. It will pull down, run up, pull down, run up, pull down, run up. But it is always in a upward motion, right? So there's going to be times when it'll pull back harder than others. But even if you bought it at the pandemic time frame and you held it through all of this, you made gains, lost a little value, made gains, lost some value. If you held it to even this point, this is the point where the US government disallowed certain companies from selling their equipment to China so that they couldn't produce the type of chips that could interfere with the US. Not getting into all of that, but it caused Lam Research to lose $2 billion after that happened. But again, soon after, all it did was head right back up. That's all it did. If you had bought at this point, I marked it already. Actually, I marked this last night. This is actually incorrect. And when I say it's incorrect, because I marked this last night and the company moved up in another $12 today, these percentages are actually higher than what I have here. So let's see. At this point, this is, give me a date. The date is March. Do I have that one? Yeah, that's the 75% gain at this point. Last night, it was 73%. Today, it's a 75% gain. At this point, it was 513. There we go. So that was 9 months ago. We have did I do it? I didn't do that one. I didn't do it, but last night it said 63%. So I'm probably going to say that amount of money is about a 66% gain. And again, pull back, move up, pull back, move up all of the time, right? That's what it does. Now, it did hit a high of $900 January 25th, and it's pulled back a little bit. But again, the market moves in a stair-step fashion. I own this company, and I owned from, no, I didn't own that far back. I think I owned from about here. I have a gain to this date. This is why you want to put your money into things that gain value. Let me put this on I want to put it on a smaller time frame so it's not so overwhelming. Here we go. So I think what I marked here are all of the different times that I actually spoke about this company. Go back, check my work. I'm gonna go ahead and pat myself on the back for this because I got it right? And I hope that I continue to get it right. And when I say that, meaning I have an idea of what this industry is doing, what this company will do, and what it will do for my portfolio. So again, I hope this was helpful to you. Go ahead, look at your own portfolios. Put it on, if you know how to chart, put it on a chart, right? It's not a big deal. If you're not using a platform like Thinkorswim or E-Trade or whatever you're using, if whatever brokerage you have, they have a chart where you can set the chart for a particular time frame. So look at it on a 1-year time frame, a 3-year, a 5-year. And if you don't have a brokerage at all, go to Yahoo Finance and you can do it there as well. I hope this was helpful. And I hope you continue to invest. Come back and see me for the next video. When I do come back, I'm coming back hard with AI because we need to know what's happening in this industry. Have a great one. Thanks.